Have you ever wondered why some options are so expensive while others, even with the same stock price, are much cheaper? If you have been trading options and only focusing on the price direction, you are missing on something. Today I am going to share a concept that completely changed my view of trading: volatility. And to make it super easy to understand, let's talk cricket. Just like batsmen, stock have their own playing styles. Rahul Dravid, steady, reliable, textbook techniques. Whereas Virat Kohli, aggressive, adaptive, calculated. And Rishabh Pant, unpredictable, explosive, thrilling but risky. Every stock behaves one of these players. Let's now bring into two familiar names from the market: Reliance and Adani. So Reliance is like a test match player, slow, steady and composed. Whereas Adani is like T20 superstar, 7% up one day, 10% up next day, and suddenly crashes to 5%. This difference is what we called as volatility. This measures how much a stocks move. Suppose Reliance and Adani are both trading at 2000 rupees, but their options are priced differently. Why? Because option prices don't just reflect the stock price, they reflect the expected movement of that stock. Higher the volatility, that is more uncertainty and more expensive options. Lower volatility is equal to more predictability and the cheaper options. It's like betting on a match. A test match, you can pace it. A T20, anything can happen. High risk and high excitement. So here is the golden rule of option trading. Most traders focus only on the price direction. But the real secret, option trading is not about price direction. It's about trading volatility. Once you understand, you will see the opportunities 90% of the traders miss. And this is just a start. In our upcoming videos, we will break down the different types of volatility, how to read it, and how to build a profitable trades using volatility. But for now, just remember, if you are trading options, you are trading volatility, whether you realize it or not. Just like how MS Dhoni redefined wicket keeping with his unconventional style, understanding volatility will redefine the way you trade the options. Let's lock in your learning with a quick quiz. Question 1. What is the key concept that helps determine the price of the option? Stock price. B. Volatility. C. Market trends. Or is it D. Dividend? The answer is B. Volatility. Question number 2. Which company is compared to a test match player in this video? A. Adani. B. Tata. C. Reliance. Or D. Infosys? The answer is, you guessed it correctly, it's C. Reliance. Question number 3. What is the key difference between Reliance and Adani in the context of volatility in this particular example? A. Reliance move predictably while Adani is highly unpredictable. B. Both companies move in a similar way. C. Adani moves steadily while Reliance is volatile. Or is it D. There is no difference between the two? The answer is A. Reliance move predictably while Adani is highly unpredictable. Question number 4. Why are options on the more volatile stocks generally more expensive? A. Because they have higher strike price, because of higher expected range of price movement. C. Because they have longer expiration dates. Or is it D. Because they pay higher dividends? The answer is B. Because of their higher expected range of price movement. Question number 5. What is the golden rule for options trading mentioned in this video? A. You are only trading the direction of the stock. B. You are trading the volatility, not just the direction of the stock. C. You only trade when the stock is moving in a particular direction. Or is it D. You always bet on the underdog? The answer is B. You are trading volatility, not just the direction of the stock. Drop your quiz score in the comment. I'll personally check and guide you on the next step towards mastering the option trading. If you found this valuable, send it to a friend who is trading options without understanding the volatility. In the next video, we will explore the characteristics of volatility and how to use them in real trades. Until then, keep learning, keep winning.